Welcome to Between Two Houses, the only real estate series in Alaska. My guest today, Michael Fester from First Rate Finanglers.
Michael Foster, First Rate Financial.
Okay.
Yeah, man. Thanks for having me. Appreciate being here, and it's gonna be awesome.
Right. So, Michael, the loan man.
Sure.
You lend money. Good for you. I'm a licensed real estate agent, which means I show houses and you get paid. Funny how the market decides things like this.
Actually, man, I love what I do. I get to help people realize the American dream. Right now, rates are really where it's most exciting. I tell people all the time, if rates were a movie, they'd be rated R for rately good.
Okay, next section. So, Michael, let's get to the brass tacks. Is it true you have to actually check a borrower's credit score? Or is that just a cute thing you say to make the whole process feel more exclusive?
No, that's actually exactly true. We really want to make sure that whoever we're getting into this big purchase is going to be able to pay back the loan amount that they're pulling out, and that they are set up in order to be successful.
But I have a client, she got very mad when I suggested she pay off her Target card. She said, and I quote, "I need the cash for essential oils." So is that a hard no on her? Or is there a way, I don't know, just to check her horoscope instead?
I mean, we have to be thorough, right? She may not need to pay off the whole Target card, but we got to do some checks and balances.
You like to talk about rates a lot, which is fine. But honestly, I got into real estate because the HGTV shows. You know, shiplap, open concept. No one ever explains how to calculate APR on Love It or List It. You just show up and ruin everything with numbers, right?
I mean, credit bureaus are a little bit more realistic than the stars. They give us quite a lot of information that really go into helping set somebody up for success. We're like the GPS coordinates to getting into a home.
You like to talk a lot about rates. A lot. Which, fine. But honestly, I got into real estate because the HGTV shows. You know, shiplap, open concept. No one never explains how to calculate APR on Love It or List It. You just show up and ruin everything with numbers, don't you?
I mean, it's a little bit more than numbers. You got to think it's like the cost of doing business. If you think of mortgage as a boat, the rates are what help keep you afloat.
Okay. I heard a story, a very funny one about you, approving a loan for an igloo. Did you actually approve a loan for one? Specifically, structurally sound, well maintained seasonal igloo?
Oh no, Jeremy, we definitely don't deal in igloos. I have never made a joke with a client about financing an igloo. We deal in structured homes, homes with a foundation, homes that are permanent. And while igloos are great and good in the wind, they're not going to quite cut it.
So you're saying you can't approve it, even if it were, say, furnished with premium hides and had a perfect 850 credit score? You just won't finance this quintessential Alaska home?
No, we wouldn't be able to do it. No one would be able to do it. It needs an appraisal. It's got to have permanence. We can finance your new log cabin or a manufactured home, even a mobile trailer. Unless it's got permanence, though, we can't do it.
Michael Fester admits igloos are structurally sound, refuses to fund dreams, blames appraisal. Got it. Sounds like a very bureaucratic answer.
Look, Jeremy, the real key takeaway here is that there's a lot of fantastic opportunities. The market's strong, and a little preparation from the borrower can go a long way. Think of me as like your personal finance trainer, right? I put the P Arsenal in pre-approval.
Okay, then. So, another scenario. Let's talk about the fees. When a loan closes, there are closing costs. Lots of them. Is that true that every single one of these fees, the points, the origination fee, the appraisal fee, the title fee, is just a little kickback to the lender for successfully keeping me from having a savings?
No. Most of those fees all go to third parties. You're going to pay something for the rate, but otherwise it's going to the appraiser, to the title company, and to the government for recording the deal.
Right. Third parties, you say. That's what a successful person says. And speaking of money, I've heard about down payment assistance programs in Alaska. Are these just clever ways for you lenders to trick the state government into paying your fees, while I, the agent, still waits for my meager commission?
No, Jeremy. Those programs are purely designed to help folks who need a little bit of help get the help that they need. They are lenders and state assistance programs that are designed to get somebody who may not qualify for a home into a home. And here at First Rate, our motto is to serve our community with purpose.
Must be nice having a job where you get to say yes. All I got to say was no, the septic system is not in the living room, Miss Henderson. Okay, time for the segment that gets me the highest engagement. Rate it or regret it.
Okay.
It's rapid fire. Try not to over-explain interest rates, please.
Okay.
A cash offer with no appraisal contingency.
Rate it.
A borrower with 580 credit score who just bought a boat.
Regret it.
The current unforgiving seller market in Anchorage.
Rate it. That's exciting.
walking into a listing and realizing the seller left a fish drying rack in the living room.
Regret it.
Being a successful lender while I'm still a licensed realtor who hasn't closed a deal in 18 months.
I'm very happy for my success, Jeremy.
Regret it is. Well, Michael Fester, thank you for coming to my show. I guess it was fine. Try not to get too excited about your next closing. It's just paperwork. No one's building a legacy on adjustable rate mortgages.
It's about helping families. It's the biggest transaction of their lives. It's exciting. Call me for your next loan. I'm happy to help.
That was Michael Foster from First Rate Financial. When we come back, I'll be interviewing a box of old tax records. I think they have a better chance of closing a deal than I do.